Welcome back, everyone. This week we're doing the weekly performance report, so let's get into it. The noticeable activities over the last week was that I sold CLBT, Celebrite, and I haven't really talked about that company other than my technical participation in being a shareholder, and I no longer am, so I'll leave it at that. Then I bought more Grown Rogue. Their Q1 report came out, looked good to me, and then I put in a limit order to buy some shares. While I think it was one of the past days, it was down 13% on the day. I think it was Wednesday. It went from like 83 cents to 70 cents, and then all the way down to 66 cents. Of course, no shares really traded at 66 cents. That was merely the bid, but not the ask, because I actually had some limit orders in at that price and never got filled. So maybe someone else got filled and I didn't. That's the consequence of pretty illiquid stocks. Micro caps on the OTC, volatile swings happen. So from the intraday high to the intraday low in the last week, saw over maybe 25-ish, roughly 25% price swing. So is what it is. Then I've kept showing you, so I might as well keep showing you until something happens one way or the other. Let me zoom in here. St. Joe Company. There for a brief period in time, it broke this pennant I keep on talking about, because why talk about fundamentals when you can talk about technical analysis? Even though we've talked about fundamentals here, but fun chart. So it broke down. I was like, oh boy, here we go. Here's the 10, 15, 20% landslide. But it bounced back. So it's back in the channel. Was it a fake out from, the market manipulators and algos and whatever other stuff people want to create as conspiratorial predators? But nonetheless, it broke down, but then it saved itself. So who knows where we're going with that. Which is interesting because as a company, it's doing well, and I can't say that it's so overvalued that it's just waiting to lose 20 or 50%, or that growth stopped or anything like that. From the annual shareholder meeting a couple weeks back, one of many charts they showed, but this is one of the slides in their presentation, is you have their 2024 unit milestones, a snapshot of it, and home sites, 85% complete with that of their goals. Hotel rooms, 87%. I won't name off each one, but they're, we're halfway through the year, and they're at least halfway through their milestones. So that's to say that pretty much things are on course. Club memberships are already at 102%, so that's the only one that is done. I don't know. You tell me if it goes down, if it wants to break and fall a reasonable percentage. Good chance I'll buy more. With that said, we closed the month of May, and with that, I ended the week down 1.25%, and I ended May up 2.79%. The last 2 to 3 weeks, the first couple of weeks of May were spectacular, and then the start of this last week, Monday, I was like, oh, well, I figured I was going to end the month down negative, but I managed to eke out a 2.79% return, which isn't the worst, not the best. The S&P, I think, is, well, let's pull up the S&P. The S&P roughly did 5.5%. So the S&P ended May 5.5% up. I ended 2.79% up, which means that my outperformance spread is getting closed by the S&P because I'm not gaining as quickly as the S&P is gaining, which means that at this rate, in another 6 months, the S&P will be outperforming me. If I made 2.8% each month and it made 5.5%, you could say simple math is roughly 6 months it would beat me, and there's more than 6 months in the year, which means all else being equal, if you wanted to entertain this kind of unproductive thought, the S&P would beat me by year end. So, well, is what it is. We still have June, July, August, September, October, November, and December to figure this all out. So that brings my year-to-date performance to 21.69%, and the S&P's year-to-date performance of 11.3%. So that's that. And then not much going on with my portfolio, as I noted. So I don't have much to say. Celsius has been clipped back by 20%, let's call it. Glasshouse has been clipped back by 20%, let's call it. Valeris doing well. I'm actually slightly up on St. Joe, surprisingly. Not really sure how that happened. Then Flutter's my only down stock. For now, I'll hold on to it. There's a new stock I'm looking at, which, depending on the position size I want to make it, that would have all my cash position. And I'm already looking at Flutter, perhaps to sell it to then transition this new name. We'll see what happens. I'm predominantly bullish, as the article I put out yesterday or 2 days ago, about online sports betting and Genius Sports, Genie as I call it, and a lot of people probably do too. That's my way of playing it, which you can see right here, because Genie is 7.64% of my portfolio and Flutter is 3.26%, which is to say that Genius Sports is twice the size of my portfolio as Flutter Entertainment is. So, is what it is there. Siboney Stillwater holding up well enough. I think it still might be down on the year. I mean, if you zoom out on a 5-year chart, you could quite well say that you haven't missed the run up. Kinross Gold, that one, that is slowly working its way to being the top performer. I've had Kinross. I think I bought my first. Well, I know I bought my first shares early last year when it was, I think, roughly $3 before everybody was all excited about gold and everybody chasing it and FOMO and pumping it up and talking about the futures contract at all-time high and blah, blah, blah. So I positioned early in that, and it's shown. I'm up 76%. It was a small position size. I was actually hoping I could accumulate a larger position over time, but it kind of ran on me. I think I added some in the 4s, maybe some in the low 5s, and that's the last I added to that. Kodiak Gas Services pulled back a little bit. I mean, just weekly stuff. Victoria's Secret earnings coming out, I believe, next week. Interesting to see how that goes. And that's really all I have for you. So thank you for watching, and until next time.